Hello everyone, welcome back to Upside Down Data. Today I want to talk about the crypto markets and the equity markets and talk a little bit about why there might be some reasons to be optimistic. If you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter where we put out regular updates about our risk indicators and more. So I'm going to start off with the Bitcoin chart here. So, obviously I think most people in the crypto space watch Bitcoin pretty closely because it tends to set the tone of the market. And recently, we've been really just kind of stuck in this range between kind of the mid 40Ks and the low 30Ks, though we've been setting in consistently higher lows as we go. With this kind of around 45K-ish range acting as a pretty strong resistance line so far. But you'll notice that Bitcoin's now pushing up and it's trying to actually set in a higher high from this previous one and potentially chart back up to that point. And so the question will be, can we go back and break into a actual higher high above this level? And that's the level a lot of people are watching as kind of this line in the sand, as it were, between before getting too excited. So we're gonna have to wait and see. But there have been some encouraging things that we've been seeing. ETH has also been doing quite well. ETH is going on its 6th day, I believe, in green candles, which is quite nice. It's also trying to break up, put in a new higher high after putting in consecutive higher lows through here. Be interesting to watch. But in a lot of ways, the crypto markets are kind of less interesting than what happened with equities this past week. And I think what we can kind of trace this back to was the Fed meeting, the FOMC meeting, where the Fed committed to a 25 basis point interest rate hike, and that met expectations of the market. And this is something that I had thought was very plausible going into that meeting, is that if the Fed did what was expected, if the Fed didn't really change the game, didn't shake it up at all, just did exactly what people were expecting, the market might react quite favorably to that. Because again, we've been in this kind of oppressive, uncertain environment for so long. Really ever since the beginning of the year, markets have been trading down on the back of this kind of rather nasty and kind of ever-present uncertainty that's been in the market because of things like inflation and also the tragic events that are unfolding in Ukraine. All of that has kind of led to this very uncertain environment that has that markets have not enjoyed. Markets have not reacted well. So Bitcoin has been subject to that, and altcoins, Ethereum, other assets, as well as the broader equity markets. But you'll notice the equity markets have been reacting quite favorably, and actually the S&P 500 has put in a higher high. So it put in a higher low and now a higher high, which is hopeful. That's something you'd want to see for any kind of potential for a reversal. You need to take out the previous high, set in a new high so you can set in another new low, new high, etc. So far so good on that count. NASDAQ has also done the same thing, that it closed putting in a higher high than before. So this is good news. But of course, there's still some milestones to be reached, right? The S&P 500 is currently coming back up to test the 200-day moving average. The moving average, a lot of people watch very closely, is kind of being this really important line between bearishness and bullishness. And there's good reason for this, right? If you go back recently, the only time we were below the 200-day moving average was actually during the COVID crash, and then only just some little dips below it, as well as the correction in 2018. And then really ever since the COVID crash, we hadn't really become all that near to it, and this was the first time we had gone below it in quite a while. It would be quite a hopeful sign if we can flip back above it and maybe turn it back into support, so something to be watching here. And the NASDAQ has a little bit more work cut out for it to get back up there. It's still sitting pretty far below its 200-day moving average, so it was coming back to test its 50-day moving average, which is another one that people tend to watch closely. So certainly, to get more bullish on tech, NASDAQ, which was even more hard hit than the S&P 500 in this correction, we'd again like to see it track back up to those levels. But certainly this is a good sign. This kind of just from a market structure perspective, being able to put in a higher high, that can suggest greater confidence in market participants, that they're willing to not just sell off as soon as they get back up here, not just to sell the pump, but actually let price go in, or maybe even continue to buy in, push the prices higher. Something that we're going to have to watch and see. And if we look at the dollar, so the dollar is something that people watch often in crypto, because generally when the dollar is doing well, This is DXY. It's basically the dollar put against a basket of other fiat currencies. When the dollar is doing well, Bitcoin and risk assets generally tend not to do all that well. When the dollar is going down, risk assets tend to do better. And so what we're seeing is that the dollar has been rallying really ever since May, really ever since kind of early summer of 21. It has just been on a kind of continual rally. But now that's getting back up to these kind of zones that it was hanging out at for a while back in 2020, then it looks like it might, and again, might, nothing sure yet, be getting rejected off of here. And really, when you see a rally this long and this continuous, it does make sense that there could be a correction on the dollar from here. And if that happens, that could be quite bullish for risk assets potentially. Another interesting thing to look at that's not the dollar, but what's interesting is looking at stable coins, how the dominance of stable coins specifically. So dominance getting at percentage of the market cap. So what I have here is just the USDC, USDT, and UST dominances all added together. So this is just to get not the entire stablecoin market, obviously. Those are not the entire ones, but they're some of the biggest ones. So it gives us a reasonable idea about what is going on with stablecoins. And the reason you might care about stablecoin dominance is it suggests what people might be doing, how much cash is sitting on the sideline that might be ready to get pumped into the market. So you can see just in these three stablecoins, we're at about 8% of the total crypto market cap is in altcoins. Excuse me, not altcoins, stablecoins. Suggesting that there's a good amount of money sitting on the side. And then, of course, you add in all the other stablecoins that are out there, it'll be a higher percentage than that. But what's more interesting with this metric is just looking at directionality. So you can see that stablecoin dominance has been on a run really ever since November, which makes sense. Stablecoins, their market cap tends to go up as the market tends to do more poorly, as the riskier assets. So, as Bitcoin bleeds, as Ethereum bleeds, then stablecoins tend to go up because people are taking money off, they're taking profits, they're putting them into stablecoins, and they're just sitting on the sidelines. So what we'd be looking for here is for this dominance to really fall off a cliff, because that would mean that people are taking their money out of stablecoins and more than likely putting it back into the crypto market. Now, obviously, this could fall if people just take money out of stablecoins back into fiat. But, oftentimes, once people have money in the crypto space, they're happy to just leave it in stablecoins if they're not using it. And I wouldn't expect that to really change unless there be something crazy that would happen to stablecoins that would lead people to want to pull their money out of it. So really, my expectation is that if this dominance goes down, it'll likely mean that that money is being put back into other crypto assets, which then might be able to pull their price up. So interesting to see, but we have been getting kind of consistently rejected off of around kind of the 8 to 9% spot here, kind of consistently rejected. It would be great to see us kind of take out this low, take out these lows, and really chart down on the stablecoin dominance. That could be quite bullish for the markets. Okay, so those are just some charts, some data that I'm looking at that are painting a potential setup for a bullish movement in the crypto markets, right? When equities do well, given how correlated everything's been recently, that tends to be good for crypto. And then if we do see this stablecoin dominance fall, and if we do see the dollar fall, really correct off, that could be a great bullish tailwind. Now, there's a couple other things I want to talk about today that I also think are interesting, specific to Bitcoin here. So I'm going back over here to Chain Exposed, and I'm showing you here the short-term realized price. So short-term holder realized price. And essentially what that is for, as a group, short-term holders, which are oftentimes defined as people who have been holding Bitcoin for less than 155 days is the general definition. So short-term holders kind of defined by age in that way. It's basically their cost basis. That's the realized price. That's what it's getting at. As a group, what is their average cost basis, more or less? And that's really what this is showing here. And so currently, it's just under 47K. It's at around 46.5K as I record this. Interesting that there's actually a lot of confluence between the short-term holder realized price and the 20-day moving average. That actually, if you look at the 20-week moving average, you compare the 20-week moving average to short-term holder realized price, they actually tend to act quite similarly. It's quite an interesting dynamic in the Bitcoin market. But anyway, I digress. And really what you look at with this particular metric is that this can act as kind of a resistance zone potentially. The idea being that short-term holders are statistically more likely to spend their coins than longer term holders. So the idea is that when you're in bearish times, this can act as support sometimes. For example, like we saw back in September. When you're below it, it can act as resistance. And so just like how people talk about the 20-week moving average as being an important line for us to get across, so is the short-term holder realized price. And so what I'll be watching for is, can we move price back up to these levels around 46K, and then can we break through it? Because if we do break through it, that would be quite bullish for a number of reasons, right? We've been consistently rejected off of just below that range. And here we have kind of an on-chain structural reason why there might be a lot of resistance around that range, where short-term holders are just trying to take profit as maybe things get near to their cost basis. So clearing above that would be a very bullish sign. Now, there's some other things that we can look at, though, to get more nuanced understanding of what's going on with short-term holders at these different levels. So I want to show you here the age bands realized price distribution. Essentially what this does is it had the Bitcoin price charted on the x-axis, and then just the kind of amount of supply that has realized price at these different levels, and then color-coded based on how old it is. So what I've done is I've taken away all of the coins that are older than 140 days. So again, this is getting about around where people usually draw the line for the short-term holder kind of cutoff here. So this is really kind of the cohort of short-term holders where their realized price distribution is. What we can see is that we have some people who are still kind of the top buyers, up around 64K, people who are still holding off from the all-time high back in November and then kind of down through here. But you'll notice that there's been a big movement down into these levels, that a lot of these people have already sold their coins, and now their coins are sitting in these levels, currently right around where we're currently trading, right around the low 40Ks, some down into the 39Ks, not a whole lot sitting below, for example, 35K, which again makes sense because the last time we were here was too old for 140 days to encompass it. So these would be the people who really bought in during some of those capitulations that we saw more recently. What we can see is that we're kind of the bulk of the short-term cost basis, as we're seeing here, kind of as average in terms of the realized price distribution, is right around here. But we can take a more nuanced perspective and see how the coins got here. And that's what I think is really interesting about this chart here that I'm going to show you here. And this is looking at the long-term holder and short-term holder realized price shifts over the last 30 days. And the way that you can read this chart is that these pink lines with the kind of the dots, these pink bars with the dots, this is where short-term supply has moved from. So of the short-term holders who have sold, what was their cost basis? And then these dark red lines are showing you where it moved to. So in the last 30 days, there's been a lot of supply moving from these top buyers, them capitulating out of the market, that's moved down into hands who are buying in this zone down here. And what's interesting about this chart over the last 30 days is that you'll notice there's been a lot more selling from short-term holders, these pink lines, pink bars here, than there has from long-term holders. You'll notice that very few long-term holders who have been holding coins from down at 10K or below, very few of them have been taking profits in the last 30 days. There's just not been a whole lot of selling pressure from these people. Some people have been taking profits, but not a whole lot, right? The highest bar is at 34K. So these were long-term holders who were probably just back from the summer, maybe just getting worried that we're getting closer to their cost basis and selling. But really, in terms of the really old hands, the people who've been around for a while, not really a whole lot of selling going on from them. They're mostly staying put. And we can see this if we just throw on the unchanged long-term holder supply from the ranges back here. These are these dark blue bars. You see that they're just not really selling yet. They're just kind of holding tight, not really doing much. And still, even a lot of long-term holders holding from the top who haven't decided that they want to sell. So what we can get from this, what I think this buys us, is it tells us where is the selling pressure coming from right now. And what this is showing is it's not the old hands. It's not the people who are sitting well in profit. They're just holding tight. They're expecting better prices to come. It's really the short-term holders, the people who bought the top more recently, and specifically the more recent top, right? Again, if we look at this unchanged long-term holder, these are the people from back in the spring. A lot of them are just holding tight. They're not selling here. We can see that it's really the people who bought the most recent top back from November who are capitulating out and probably leading to a lot of this sell pressure. And then we can see, again, the importance of that 45K range. You can see a lot of sell pressure that's happened here. A lot of these short-term holder coins moved from that 45K range down to these lower prices, that it changed hands from these shorter term holders who had bought the coins at 45K, and they're shifting it into some of these older hands. So essentially, as the cost basis gets back up there, they were just selling out down into. Now, it's going to be interesting to watch then is how long can this sell pressure maintain from these top buyers before maybe they turn into the the long-term holders. So once time has moved enough that they shift categories, that these short-term holders move into the long-term, what might that mean for price? Because you can see there's still a good number of short-term holders that are just holding from November. They're not selling yet. So these could be possible sellers who will step into the market as we start moving up into these levels. But who knows? Maybe once there's bullishness that re-enters the market, they'll instead hold tight and then just add to the ranks of the long-term holders. It'll be interesting to see how that dynamic unfolds. And we can see that a number of people are already entered the long-term holder category from those levels. So kind of as time moves on, more and more people might enter those ranks. And so I think it's kind of notable in a lot of ways that the selling pressure, as we can see on this chart, has really come from short-term holders who bought the top. And it's not really long-term holders. If it was these people who are dumping out of the market right now, I'd be very worried. Because that oftentimes happens before bear markets. It's really these people who kind of set the stage for those bear markets to unfold. When they're capitulating out of the market, usually that means something's not going right and it's time to be careful. When a short-term holder is selling, that can just mean that weak hands are getting flushed out. And then once they're exhausted, then price can start moving up. So we can also just look in more of the short term, what's been happening, but it's really the same story. Kind of recently, it's just been folks selling off of these more current levels, but not in the last 7 days, and in the last day, not a whole lot of long-term holders have been selling compared to what we can see over the 30-day period. Okay, so those are some on-chain data that I just think are interesting to note here. That if Bitcoin can continue to chart a course upwards and start retesting these zones, the 45K range is going to be very important, just given that it's kind of the average short-term realized price. But if we can clear through that, that might be quite good. And maybe we're starting to get to a point where short-term holders, the sell side is starting to get exhausted potentially. Maybe a lot of the short-term holders who are going to sell have sold at this point. So to wrap us up, I just want to talk about the UDPI, our risk indicator. I like to touch on this just to see what it's thinking about the market. So here it is for Bitcoin. So the way that you can read this is 5 is high risk, -5 is low risk. We have the long term. Here's what moves to play out over months, years, medium term, weeks to months, short term, days to weeks. What you can see is that the long term UDPI is still bullish. It still thinks there's more realistic upside than downside potential in kind of the longer term, but it has been tracking upwards ever since back in February and January when we put in kind of our local bottom that so far is held as being the bottom. So in some ways we've been realizing realistic upside potential. There is room, there is the possibility of a capitulation, but there's certainly room, plenty of room to the upside if Bitcoin decides to break that way. And in the shorter term timeframes, it's quite undecided. It thinks that Bitcoin could really go either way, that maybe we need another pullback. So a rejection off 46K is very plausible from this perspective. But should Bitcoin break through those levels, we can start potentially clearing through some of the upside short-term upside potential that is plausible. So none of this is financial advice. You should form your own opinions of what you think is going to happen. But in my opinion, I think there's evidence, there's reasons that being bullish is not absurd right now. Now, I'm not saying that that's guaranteed that Bitcoin is just going to clear to all-time highs immediately, but we're starting to see some different things line up that are hopeful. So I'm going to be watching those key levels as we go forward. And if Bitcoin is able to start showing strength and break through those points that could be strong resistance, especially in the short-term kind of cost basis zones, that would make me very much more optimistic about the sustainability of a potential rally. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, UDPI, we're all going to make it.